Welcome to the Monday. So we're gonna make it very short. It's not gonna be very long. Just to make sure that everyone have a bit of understanding what we are all about. We make it very short so that everyone can understand. Otherwise, welcome to the session. If you can hear my voice and you can see the screen, please type on the chat box that you are definitely in. Just write I'm in, and then I'll know that you can see the screen and you can also hear my voice. So please just go to the chat box there, you know, please type on it. If you're watching this video, this session on YouTube, please make sure that you subscribe to the channel and you like the video. It helps in terms of the algorithm and it also grows the platform. Please type I am in if you can see the screen. Very important just to know that nobody is like lost, because sometimes you be like, hey, you be talking, and you like you can't really, if you can see, the screen and can hear my voice. Perfect. Thank you. Great stuff, exciting stuff. That is good. So basically, what we're all about is a millionaires intelligent institute. So it's just about adopting the way of thinking of a millionaire, the way of doing things as a millionaire. It's just about educating, empowering, and enriching. So those are some of my Instagram is Mr. President Wonga, Twitter Mr. Price Wonga 7, and then you can call or WhatsApp me on 078 33 8747, and that's my email address. Very important that you have those details. So I keep mentioning this. The reason I have to mention is I have to repeat it over and over so that we can have a bit of understanding. Our mission is financial freedom, but obviously you're gonna start with education. We're focusing on educating the power of the financial markets and what it can do for you, what it has done for us, as some of the entrepreneurs, traders, and coaches within the group, and obviously sharing the platform, the right brokers, and a platform that you can use, if you are going to be focusing on trade. Okay. So looking at this, um, yes. So yeah, so if you're gonna be just a bit of a disclaimer, it's very important. Just understand the risk of trading. Forex, commodities, futures can be substantial. So it has a lot of risk that are involved. You must be aware of the risk and be willing to accept, before you get started on trading. It's also important to note that all the information that is given on this Zoom meeting are for educational purposes. It's not a financial advice. So just be aware about that. It's very important just to mention that disclaimer, because it's very important. If obviously you need financial advice, always consult your financial advisor. Money there in the bank, you know. Otherwise, in trading supply and demand, these are some of the rules. Always look left. I'm gonna define what you mean by look left. Always sell at supply. Always buy at demand zone. Always use the stop loss. It's very important to always use a stop loss because you don't want to lose more than you can afford to lose. And always never forget rule number 1, 2, 3. What is rule number 1? Always look to the left. Always sell at supply, buy at demand zone, and always use a stop loss. And always never forget rule number 1, 2, 3, and 4. Okay. Important movement that you must understand. A rally. When you talk about the rally, we talk about the buyers exceed the seller. What do we mean? We meaning there are more buyers than there are sellers. So more money is being pumped into the market to push the market into a rally. A rally means it's an uptrend. It means the market is moving up. It also means the market is bullish. So bullish meaning it's pushing up, further up. And then the drop means seller exceed buyer. There are more sellers than there are buyers. So we call this a supply zone because there's a huge supply, whether of a currency, huge supply, maybe it's an instrument, maybe it's gold or silver, or maybe it is an indice, maybe there's huge supply of. Yeah. Okay. So in a when you talk about the drop, we are talking about the market that is actually dropping, that is going down, that is bearish. In that case, you're looking for selling opportunities where you're gonna sell. So you get a pullback and then a sell. The market will drop and break certain level and then close below that level. And you're just looking for selling opportunities. And obviously, the drop or the seller exceed the buyer, more likely is what we call a bearish market or a supply zone. So the market will give you all those supply zones. So we sell at supply and then we buy at the demand zone. The demand zone, you see the rally, you see the market being bullish, pushing up. And then you talk about the base. The base, you've got the seller and the buyer in equilibrium, meaning there's a balance between the sellers and the buyers. That should mean if you've got 100 buyers and you 100 sellers, everything is balanced. It means the market is not moving up or the market is not even moving down. Okay, let me just explain this by looking at the chart. Okay, just before we explain that, let's just go through what is happening today. So today is basically what is going on. Just for you, for those that are not aware, if you go and check out the economic calendar today, because it's very important just to be aware. So instead of because today, if you've been looking at the charts, you can see the charts are not really moving aggressive as they normally do, and they're even active as they normally do. Why? Because it's holiday. In the US, it's Memorial Day. Memorial Day in the US. Also, United Kingdom is also it's closed. It's a bank holiday. You won't see much movement in the pound. Also, Switzerland CHF, it's also a Pentecostal day. So that's why you don't see much movement. When you talk about Europe, you talk about China, you can see there was some movement right there on that side. But just to understand it, when you talk about Memorial Day, what are we talking about? Because sometimes, basically, is Memorial Day a big holiday in the US? Memorial Day is federal holiday. All non-essential government offices are closed. Schools, businesses, and other organizations. Most public transit systems do not run on a regular basis, as you can see. So, yeah, basically, that is what is happening today in the US. That's why you won't see much movement when you talk about the NASDAQ. And you can see there's a federal holiday in the United States of honoring you as military personnel, died saving the United States Armed Forces from 1868 to 1970. So it's very observed on the Monday 29, 2023. The reason you have to go through this is just for you to have a bit of understanding what is going on. Yeah. So let's just get through that. That is done. Because sometimes people asking, why is the market not moving? Why are we not seeing any major movement? Okay. So we did talk about this. So now I hope you can see my screen because I'm just looking at the chart now. Okay. So right now, what you see is this. This year, I think we've done the analysis before, and you can see not much movement, in terms of the USD, because it's a holiday in the US. Okay. Kola is joining us. Welcome, 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 Kola. All right. So remember the rules. Let's just go back to them again. I believe when you are learning something, repetition is the key. These are the 5 rules, right? Always look to the left. So the first rule is always look to the left. Always sell at supply. Supply is where you've got a huge supply of something. There are a lot of sellers So there are more sellers than there are buyers, and the huge supply of something. So more people are keen to sell because the price is high. So remember, you need to sell at the highest price. Buy at demand zone. In this level is where you got a lot of buyers, so the market will more likely to rally because it's at the demand zone. In this case, you've got the buyers that will definitely exceed sellers. Okay. Remember, this session is more, we mentioned before, it's more for like beginners or immediate traders. If you're an advanced, I think you will be a bit bored, but you definitely have a bit of you gain something. It's more like a revision for you. Otherwise, when you talk about the rally, buyers exit seller, drop, seller exit buyer, base seller, and the buyer in equilibrium. Okay, so now if you still okay, oh yes. All right, I think we are back. Ooh, seems we're having a lot of problem tonight. Okay, so we talk about the rally. Okay, so let's just look at this. When okay, normally what we're talking about, for example, here, okay, when a market is not moving aggressively, like dropping or going sideways. So, for example, here, let's just call this a base. Okay, this here is a base. Okay, this here, let's just call this a base. Okay, so a base is where you find that the buyers and the sellers base. Let me just show you. Base is where seller is basically the sellers and the buyers are in equilibrium, meaning the market is just not moving aggressively down or aggressive up. Okay. And then you talk about it's showing it. Okay. When you talk about this breaking out from that base, so let's just call this a base. Remember, if you understand, if you've watched some of the movies, the movies of I think soldiers, the base is where they unite, make strategies and plan. So they call that a base, basically just call this a base where you find the market is not moving, it's just it's like a base where you can use an analogy of soldiers in the base, planning, making strategies, thinking what is going to be their next move. Okay, so the next move, obviously, after this level, as you can see, after this, there was a huge drop. So the next move after the base has been communicating and planning, then there was a huge drop. Okay, a huge drop meaning this was a huge supply level and a huge drop, and then they come back when the market drops, come back, retest a previous level. What is that previous level? You can see we did talk about this. Okay. And you can see this level here, it broke below this candle, dropped below this, and now we have another base, because now the plan is continue dropping, and you can see this drop now, which has been going in the form of a compression. Okay, we call this a compression because some people can't call it a channel, but it's going back, checking that zone, Is there any more thing we can sell? Yes. Then dropping again, then returning again to the same level, then dropping again. So this has been on the bit of a downtrend. Okay. So now understand this is a base, and then a drop happened, and then coming back to the previous support level. Okay. It's very important to understand it. Remember the rules. We are going to be selling what? So we'll call that support level as previous support. Remember, I'm introducing another term now, which is support. Remember, I would like to mark not I like to mark the end of the candle, not the pin or the shadows. Okay, remember the candles, when you talk about the candles, yeah, I believe everyone have a bit of an idea. When you talk about the candle, yeah, I think everyone got a clue. So you got a candle, and well, yeah. So it has this. So we call these shadows. Yeah, and then that's the shadow. So what I do, I only draw this level. I only draw from this level and that level. I don't draw with the shadow of a candle. Okay. If I'm marking a zone. Okay. So let's just zoom in. You can see right now the movement of USD JPY. It is currently in this was support, and this was the first time retesting this level. So let's call this, you know, I want to call this, I want to use simple terms, let's call this first. Okay. We're going to be diving deep in terms of like breaking down all the terms. First time, let's call this FTB. First time, but no, we can use another term like FTR and most traders use, but let me use FTB for a purpose of understanding. So what I'm expecting to happen here is this, the market will come back here. So what you will have on the market is here, you will have something like this. You'll have this as your R1. Remember, the market is a structure. So R1, this side, okay. And then this side, you will have what I call R2, okay. Why is this happening? R1, R2. So these are what I call resistance. Okay, that's support. Okay. So this here now is basically a flip zone. So meaning where you've got support, now you've got resistance. When the market come back here, at some point, they'll have to go back to that level, which was a huge supply. Okay. That level. They have to go back there. But they will only go back there once there is enough liquidity right here. Enough liquidity right here. When you talk about liquidity, what are we talking about? We are talking for people that are selling here. So when you sell here, remember, what do you do? You've got a stop loss. So because I need everyone to have a better understanding that right now we're going to be focusing on trading price action. So trading price action, which means we're just going to be marking the zone that are critical. So the stop losses are your liquidity. Stop losses are your liquidity. And you're also going to have people that are trading something that's called a breakout. So the breakout traders will have their trades right here. They are pending orders. So you have breakout traders. Breakout traders. So these are breakouts. Traders, what are they looking for? They've got their pending orders, which are, in this case, is basically buy stops. Let me just say, just pending orders. Okay. Remember, when you're talking about the market makers or the bank traders, they don't just move the market because they feel like moving. They move into a zone because they see liquidity. Liquidity is your stop losses, it's your breakout traders. So they will have to move when they see, since them they cannot place a buy because they feel like placing a buy. They'll place a buy because they see a lot of traders that are selling. They'll place a sell because they see a lot of traders that are actually buying. That's why they place a sell. They want to go whatever opposite the action they need to take, whether even if they're taking a stop loss from their buys, they need to see traders that are going to be doing the opposite action. And for them to do that, they need to be convinced that the market is actually going down. So before a drop, they're going to convince traders that it's actually going up and then give a spike and then drop. My expectation is on this candle, right? So the last bullish action is this candle. So expecting there that maybe they will do a spike up. So they need to convince traders that they're actually going up before making a drop. It's what most people call it a stop hunt. So they will not move down without doing a stop hunt. So stop hunt going opposites their intended direction. But obviously, we know we're looking at this level as our supply. So what is our rule? We are selling at supply. So another supply that is above this level is that level over there. But obviously, they need to build up liquidity here before they can go up there, so that you can have traders have got their stop loss above this zone and their stop loss above this. Remember, the stop loss that are above this zone is people that were selling here, and people that are going to be selling here. But before they drop the market, they need to do a stop hunt up before they drop. If they're going to be moving down, they need to go up. If they're going to be moving up, they need to drop down before they actually go up. Your confirmation of your entry obviously is going to be this momentum dying out. You can see now this market has been moving up a lot, but now when you see a momentum dying out on a smaller time frame, then you know what you're gonna see right here. What you wanna see something like an M. Okay, an M, or what people call it a double. You can see even that gave us this what, but some other people call it a double marrow. What is a double marrow? It's what is these two candles that look like railroad track, which that these candles, these two candles, okay? Two candles, equal size, but opposite direction, okay? I'm expecting them to go to do this, because if they're gonna be dropping, they need to go up first and have traders to be buying. Sometimes even they give a spike, they can even leave a spike, like this spike, and then before they make that drop. So, and then come back and then do the drop. So this is double marrow. Expect the spike to be here before drop even further down. Okay. When this is happening, obviously, we're still expecting, if this is USD JPY, we are still expecting what on the Euro USD to make that move of what? Let's do daily. The reason we're doing daily is because when I look at the bigger picture provides us with more information. We talk about the daily candles. Each candle here represents a day. So there's more information on a daily than there is on a smaller time frame. The smaller time frame can give us a bit of a good entry point, but the higher time frame is where we set our take profits. Okay, if you are trading price action candles that are important, I'll mark them out, and then we'll check. What we'll do is this candle is important because the market has been dropping, but you can see this is opposite direction, meaning this candle was just going up, was bullish candle on this day. Eurist was bullish on this day. Then there's a drop, and then there's a drop, one, two, and then there's a bullish candle. After that, there is a pin bar, okay, or what we call people a shooting star. So we mark that out. So I like marking these levels out where the market has been dropping, and then you're gonna mark that out again, and you will see. So we're gonna mark this candle out, and then there was more dropping. Okay, the market is dropping, and then there was this year. This year is what we call the base most of the time. When the market has been dropping, and then the base consolidate, think, plan, action. What you're gonna do as a soldier, as these soldiers that are camping, they're doing a base here, and then they drop even further. One, two, three drop, and then after those three drops, you can see another base here and then another base here. Okay, now we are at this point here. After the break from that candle, see that this was a break from that candle. Okay, there's a question. Which candle did you see for the demand zone? Okay, I'll mark that out. Okay, so okay, we are still on USD. So USD currently is still dropping. So now we just want to take a look left. So now another rule is look left. Okay, off that. So now you can see this candle. Okay, this candle. Okay, this here is what happens. You can see this here. This was a bearish engulfing candle. Bearish engulfing, you can see a huge candle, meaning a drop. But before that, there was this candles that were bullish. But then after the market dropped, and that drop engulfing was a bearish engulfing. All of this movement here, which was bullish. So this here was a bullish movement to the upside, but then there was a huge candle drop. After that, you can see the bullish movement from this side. See here, and then the market broke above here. So this was a breaking above candle. Okay, hope you can see. Let me just mark maybe with the arrows. These arrows. Yeah. So this here. So these here. Okay. So and this was the resistance. So the market broke above this level here. Let me just draw a picture so you can see what I'm talking about. Just go to this whiteboard. Okay. Okay. So what happened? You've got a candle that's just doing this, and then this here, and then I haven't used it for a while, so it shows, and then a candle came back, some candles came back, and they form this, they're moving upwards, moving to the upside, and then they broke above this area. Okay, they're breaking above, they keep moving, they keep moving, and then at some point they came back to this level, retesting this level. Okay, so what you're looking for here, you are looking for this level here, where you're looking again to do what? To buy. You're looking to buy again in itself because the market broke above that level. Maybe let's just go back again to the chart. Let's zoom out. So this here is after a breaking from that level over there. The market came back, retest, and now it's coming back to retest that level. Okay. So this here is another level of supply because this was a drop, and then there was a base. After that base, there was a huge drop, and then a base again retest, previous, and a drop. And you can see the market is now giving us this type of candles. Which are these type of candles? Are your dojis. Okay, you're gonna mark that zone. You're gonna mark this candle because this is where everything started to be bullish in terms of the Euro USD. Okay, this here, this level right here. So I'm expecting obviously that now the euro it can drop, but I'm expecting, remember, we are traders just like everyone. We are not in charge of the market. So I'm expecting the euro to come back to this level. This is the first retest. Okay. And you can see this market has been moving what? In the form of compression. What some people call it a channel. So expecting that to happen. If you go on a smaller time frame, you can see that's what it's doing. But before a huge move to the upside, expect a stop hunt. Okay, a stop hunt should give you something that is gonna be like sometimes it does, sometimes it does not. Maybe a huge spike. So this will give you something like a W most of the time. So before a huge move to the upside, on the Euro USD, expect a stop hunt because the stop hunt is going to show traders that the market is going down, and then they will buy and then they will sell because more traders are selling. That will definitely make the bank traders to say, you know what, we've got enough orders for our buying trade. A lot of people are selling, so hence they can enter their buy position. I hope it's making sense what I mean about buying when there are enough orders that are selling, and also selling when there are enough orders that are actually buying. I think we've done gold before. Okay, the original movement, the reason for a bullish move is here, right? These candles are very critical. I think we've done this before. Okay, this here is critical because this is like a base. It's almost like after this meeting that was done here, after the meeting, like a base, after this meeting that was done here, you saw a huge bullish candle, meeting a base, and then a huge move. It's almost like the soldiers were meeting here. They're like, you know what, guys, let's just push up as a unit, let's move up. And then there was a huge movement. Then they saw, okay, a lot of people are selling here, let's pull back, convince them to sell, then let's push further up, come back, sell. Same thing. And with these pins, you can see these pins, a lot of traders were actually, this level was touch liquidity, go up, touch liquidity, go up, touch. When I say liquidity, I mean they're touching stop losses, they're touching pending orders, and they're going up. And you can see after that, there was some sort of a compression, pulling back towards this zone. I keep saying this, I'm expecting a spike, obviously. To the downside, it's more like a stop hunt and then going up, okay? So this here is what we call our demand zone. Our demand zone is definitely always at the base, okay? So we call that a demand zone. Sometimes always mark the base is very about you mark. I always mark them using these candles. These candles like this one here. You can see this is a doji candle. It's important. And doji candles, hammer candles, these type of candles. Obviously, always look when there was a breakout from a level. So sometimes you can draw this. You can see a breakout from the level is that level over there, and that level over there, and also that level. If you mark those levels where you see a structure change, break from that structure, drop, come back, and then a break. A break, where is the break? This is a breaking out from the level. This is a breaking out from the level. If you change that to candlesticks, you can see this is a candle. So you mark that out as your supply, as the market dropped below that. And then you mark that as a supply again, as the market was dropped below that level. So before actually buying on a demand zone, always look for number one, Either gonna see a candle like a hammer, or you're gonna see a doji touching a level or a spike. Touching a level, a spike before moving up. Why a spike? Is because the market needs, retail traders need to be convinced that the market is going down. So hence they start selling. When they start selling, the buy orders can come in. You can see a lot of buy orders were here at this level, at this base. After this base, there was a huge movement to the upside. And then obviously expect the same thing to happen when the market comes back to the same level on the other side. Okay. Remember the rules. These are some of the rules. Okay. In the base, sellers and buyers in equilibrium. In the drop, sellers exceed the buyer. In the rally, buyers exceed the seller. Always look to the left, sell at supply, buy at demand. Always use a stop loss. So whenever you're trading, make sure that you are using a stop loss all the time. So you've done gold, I think we've also done USD. You've done analysis. So analysis we've done yesterday are still valid because the market has not actually made any move. And you can see that right there. I'm still expecting this to drop. You can see a rejection pin. So I'm still expecting it to come back to this level, which was our demand zone. Okay, this is our demand zone. I'm expecting this to come back and then drop to our demand zone, then actually go up. You want to buy here when the bank traders are buying, not buy there at the